Welcome to Stock Market Investing with the ARMR Report. I'm Brett Rosenthal, glad to have you here on a Saturday. Now, I founded the ARMR Report, which by the way stands for Algorithmic Risk Management Research, for the individual investor, that's you, who's managing their own capital. But you've discovered it's a monumental task and you're looking for information, you want to learn how to create that information flow on your own. That's what this show's all about. So what I'm doing is taking 35 years of experience managing my own capital, managing capital for investors, and I'm going to share with you a process. I call it the ARMR Investing Way. It's a three-stage process. We build our whiteboard, which is fundamental analysis, so we'll go over how to do that, and we'll share stocks that are on our whiteboard. We use algorithmic information to help us execute correctly, when to buy stocks, when to sell stocks. It's proprietary algorithms I've built over the years. I'm going to share the information with you, okay? And then the third stage, to tie it all together, is a sound stop-loss discipline. Now, I'm going to share my stop-loss discipline, but over time, what I hope to do here with you on Saturdays and every time we chat like this is to help you build a process for managing capital, where you're capturing upside when you can, but you begin by protecting capital. All right, we want to put ourselves on the right side of probability and statistics over and over again when reward's worth the risk. And here's the key. You want to stop looking at your P&L every day. You want to focus on a process, and you keep executing that, and the profits will follow. The P&L will follow. So what we're going to do today is we're going to jump into, this is always the week in review, but I want to try to start doing these week in reviews where we really focus on one of the three stages and we really discuss a particular issue. And today I want to go over the power of options gamma information in our day trading algorithms and in our investing process. I'm going to share with you how we do it, and I'm going to also reveal the key source that we're using for that gamma information, and it's something you can use too on your own. Then, of course, we're going to hop over to the cannabis couch. After a crazy couple of weeks, I'm going to share with you our thought process on what we're doing between U.S. cannabis companies and Canadian cannabis company investments. All right, so we're going to get to all that. Then, of course, I'll get to your Q&A, so feel free to throw some questions up here on the board, and we'll chat about that at the end. Couple of thoughts before we get started. Don't forget, this is personal information I'm sharing about my own portfolios. We have 3 portfolios of the ARMR Report that we share with our subscribers. They're really just 3 baskets of capital that I put my own money in, right? So I divide my capital into index investing using algorithms, swing trading, and investing in a more traditional sense, okay? And so I'm going to share my information. I'm not telling you what to invest in. I don't know you. I couldn't possibly tell you how to invest, right? I don't know your risk tolerance, the capital you're working with, and your own issues. So what I am doing is trying to share an experience that's helped me succeed, and over time I hope it helps you do the same thing. If you'd like to take a deeper dive, you can always subscribe or take a look at our website, the armrreport.com, right down here, ARMRreport.com. And of course, who wants to be the 2,000th subscriber to the YouTube channel? Guys, I love you. Thanks for all the subscriptions. I really appreciate it over the last year, maybe 2 years. And we're at 1999. So one more subscriber today and we get to 2,000. Is it going to be you? You can subscribe right down here to the YouTube channel. And of course, a thumbs up always helps. So let's move on from those issues, those questions, and let's get to the order of the day. Whoa. It's not what I wanted to do. All right. So what I want to share with you today is a strategy we use. I'm going to show you a chart pattern of the S&P and of the NASDAQ. There's a process we use every morning at the ARMR Report. So ARMR subscribers, I call them ARMR Insiders. Some of you are here today. Thanks for showing up and joining me on a Saturday after all the time we spend all week. I would think maybe you get a little tired of me. But what we're doing every week is at the ARMR Report for ARMR subscribers, we do 3 videos, right? So we do the morning call. So first thing in the morning, we look at markets, figure out what our posture is for the day. Then at 9:20, we do a live day trading feed for the first 2 hours of the trading session. And that's when all the action happens for us from a day trading standpoint. So what I do is share my screen, and the first thing we do together is we look at gamma information overlaid on top of our ARMR algorithm for day trading, which I call the Price Movement Profiler, the PMP, okay? So I want to walk all of you through what that process is and show you, just looking at the indexes, how powerful the information can be, okay? So let's just dive right in. And usually I start these mornings by going over the market, what happened last week, but I think I want to try to cut through the noise and just give you guys actionable information every time we do these live chats, okay? And so today what's really on my mind is the gamma information. So for those of you who don't know gamma, I'm not going to spend a lot of time teaching that right now. I suggest there's many great videos on YouTube for you to check them out. You can go to Investopedia. It'll tell you what gamma is. I'm going to boil it down into one basic fact for you, okay? 20 to 25% of the trading every day on the exchanges, and that number has been going up over the last 5 years, are options dealers squaring their positions. There's many different ways to parse that data. Gamma, delta, Vanna, all these different things, okay? The big one, gamma, is simply if people are buying options. Let's say there's a lot of call buying that goes on. The majority of that call buying is being bought from dealers. Dealers are selling a call. When they sell a call, it makes them short the underlying asset. Dealers are not in the business of taking positional bets, right? They're just picking up the VIG. So when they sell calls, they turn around and buy the underlying asset, okay? So if there's a surge of call buying in an index, in an individual stock, or what have you, the dealers turn around and have to buy the underlying. And for a while there, it's a self-fulfilling prophecy. I call it rocket fuel on top of a regular day trading strategy. Whatever your strategy is, I don't care what your trigger is. If you take your trigger, and let's be honest, for those day traders out there, you might have 20 stocks that look like they should be bought all at once on some days. How do you know which ones to focus on? I submit to you it's gamma information. And I'm going to show you trades from yesterday that we were involved in on our day trading desk that had huge run-ups. And it was because, in my personal opinion, of the gamma move that was the turbocharge that got the position to go. So when we look at day trading, I look at it like this. First of all, I use day trading skills to make investments in my swing and invest portfolio. And so that's why I'm talking to you about day trading. It's not just for guys who day trade all day. It's for you and me who are investors, but we want to buy right. And that starts by day trading it correctly. Wouldn't we all like to have a position on that is profitable in our portfolio when we hold it overnight as an investment? Nobody wants to put a position on, have it go down big and say, well, I'll hold it because I think this is a great idea. That's not an investment strategy. That's hope. And when you're hoping, you should be fearing. Okay? So we use these day trading tools to help manage our investing and swing portfolios. That's really why I want to share with you. So I'm going to show you how this works on 2 stocks where it's so apparent, the move. But going back to this, what I want to say is every time we put money to work, we want to do it when reward's worth the risk. What does that really mean? Well, the risk is always the stop loss. Put a position on, it's going to hit a stop. We know what we're going to lose. And statistically speaking, all the positions we put on, the stop loss is going to be pretty much the same, right? Sometimes it's a little bigger, sometimes it's a little less. When we average it out, it'll end up being the same. So the real question is, which stocks are going to go up the most? The reward, that's the key. When we're putting day trades on, we're making investments, we're trying to identify the move that explodes. You only need one a day and it pays for all the other day trades. And I submit to you that gamma information might be the piece of the puzzle that'll up your game in a significant way. It's done it for us. Now for ARMR Insiders, subscribers, we are going to have an interview, a fireside chat, a one-on-one discussion with the founder of the gamma information we're using. So the big reveal today is, as I share with you this gamma information, I want to tell you all that the website we use is called Spot Gamma. Spot Gamma. I'm not being paid by them. They have a referral program. I could enter it and get paid for this. I decided not to do that. This is not about me getting paid. I'm just literally trying to share with you information that has made us a lot of money. Now, gamma alone can be confusing. So it's not about you go look at Spot Gamma and you immediately make money. You have to take the information and apply it to the right entry points using the right triggers. If you combine the two, it can turbocharge what you're doing. And so we use this Spot Gamma information with the ARMR algo to find the right entry points and trade these names. We've been doing this for a couple of months, and we've been working with Spot Gamma information, and I really wanted to do our due diligence before I shared it with you all today on a Saturday. And we've gotten to that point where, I mean, we've been so successful day trading using this information overlaid on the ARMR day trading algo that I felt it was time for me to reveal who we're working with and how we do it. And for all subscribers, ARMR Insiders, we're going to have a one-on-one chat with Brent. Okay, he started this fund. He was the founder. And we're going to ask him directly. We're going to share with him what it is we're doing and ask him, what are we missing? What else can we get from that report? It's going to be a very interesting meeting. I can't wait to have it. It's going to be Thursday, probably at 4:30. So any subscriber, any ARMR Insider who wants to be part of that can ask questions. So write that down on your calendar. Now let's go and look at the indexes and a couple of trades so I can show you how this works. Oops, that is not what I want to do. All right, here we go. So what we're looking at right now is the NASDAQ. It looks great. Broke out on Friday, made new highs. All right, let's look at the day trade, our day trading algorithm. Just want to widen this up for you guys. Whoops, not what I wanted to do. All right. Okay, here's what we're looking at. This is the ARMR PMP, the price movement profiler. Okay, every bar it's a 3-minute chart. So if you want to learn how to day trade, I would suggest you use 3 minutes. It works best for me. I've done lots of back testing. This is my favorite time frame. The blue bars are up bars. The magenta bars are down bars. All the lines that are drawn by our algorithm that takes basic off-the-shelf technology, things you can find on TradeStation, Fibonacci extensions, average true ranges, VWAPs, all right? But we infuse, what makes it our own algo is we infuse these things with volatility components, so they change, and it makes it a little more proprietary for us. Okay, so what we're looking at here, these purple lines, these are the Spot Gamma lines. So every morning, and let me show you what it looks like. This is a page of the Spot Gamma website. So as subscribers, we get to use Spot Gamma every morning. We come in the morning, there's a Spot Gamma update on what's happening. They try to help us understand gamma information, which is helpful, right? And then right down here, what we see, we're going to look at the NASDAQ first. Right in here are the key levels of gamma. The call wall, zero gamma, volume trigger, absolute gamma, and the put wall. All these lines we then overlay, okay, on top of our own algorithm. And what we'll notice when there's support at a certain level or resistance at a certain level that matches up with a key ARMR PMP line or VWAP or what have you, we get explosive moves and we understand what the market is doing. Like if I was to pull back here and look at, and we put this on every day, okay, you would not believe, as an example, what happened 2 days ago when the market had a quick little implosion, okay? Spot gamma information right there, 332 even on the NASDAQ. And what I'm showing you right here, I want you to look at is this, okay? That setup right there put the bottom in the market. Now, those of you who know us, when we do day trading in the morning, let me just chat with you real quick. Every morning I try to share with everybody whether or not I'm aggressively buying stocks in the first 6 to 12 minutes, or if I'm not buying at all, waiting for something else. Here's the ARMR day trading way. This is one major principle. You might want to write this down. Grab a pen and a piece of paper. It really works for us. And again, this is not just for day traders. This is for when you're trying to position a stock that you want to invest in. Our goal is to position it correctly and have profits at the end of the day, so we have a cushion for our principal, right? We want to protect capital. The best way to do it is buy right, okay? So write this down. It's a day trading principle. I think it'll help you. In an uptrend, when the market gaps up at the open, we are almost never trading the first half hour. Okay? Do we put on a position, maybe one or two? Possibly. But we come in every day and we say, the gap up's not what we want. We want to put capital to work after the crazy Ivan. Maybe you've heard me talk about this. Anybody know the movie The Hunt for Red October? One of my favorite movies, great movie. And in that movie, it's a movie, if you don't know, about submarines, the Russians, the US, what have you. And so the US submarine is following the Russian submarine. And at one point, that Russian submarine just stops and turns around, does a 360 in the water. And the US captain calls that a crazy Ivan, because the Russian submarines apparently stop in the midst of their path and turn around to see if anyone's behind them. See, a submarine can't tell if anyone's directly behind them because of sonars back then. Maybe it's different now. Okay? So the market does a crazy Ivan all the time. It looks like it's doing great, and then there's this hour-long sell-off that looks like a complete implosion. You guys know what I'm talking about? You've witnessed this. Okay? And you don't know if you should be dumping all of your stocks or if you should be buying the pullback. Okay, gamma information is going to help you with that. I'm going to show you that in a minute. But I just want to say the principal ARMR day trading way is to wait for the crazy Ivan. And when you find support at a key level, could be a gamma location or some other location, and a reversal, that's when the window opens to commit capital. So if we're in an uptrend and we're day trading from the long side, the ARMR day trading way is to wait for the crazy Ivan, find the reversal, then commit capital. 7 out of 10 stocks follow the market. That's a fact. We want to be on the right side of probabilities over and over again. So if we're trading against a crazy Ivan, it's going to be difficult. Gap downs we love on our trading desk because that's the crazy Ivan at the beginning of the day. The crazy Ivan's just happened right then. Comes down to a support level, usually having to do with gamma, reverses, and we put capital to work. So putting that thought together, right here, the gap up, okay, here. So this is the prior day's close, and this is the gap up. We're not getting long, okay? We wait, we wait, we wait. The market has its hour-long crazy Ivan right there. Please notice the tail on that Ivan literally touches a key gamma level. We then have a reversal bar, which is pretty clear. That's a pretty awesome candlestick reversal bar, which sets the bottom in for the rest of the day, okay? And that signal right there allows us to put capital to work on the long side in individual stocks. And we had a good day trading, okay? Now let's look at Friday's action. Well, look what happened Friday. Friday, the market opened on a gap down. See? Closes here, gaps down. So the crazy Ivan happened first thing in the morning. Then the market finds its support. Look where it finds the support. Right on the gamma level, which was 334. So here's another thing you need to understand about gamma, okay? Options information. It's not an absolute. The price doesn't have to exactly touch. It's a level at which you look for reversal action or reversal action in either direction. Okay? So don't be rigid and say, well, it didn't quite hit the price. It's okay. It needs to take a peek at the price. And when there's a reversal after looking at that price, then you know you got a gain. So what we have here, what we have right in here is the market contending right in here, okay, with the gamma level of 334. And the breakout above it right here at 1039. And by the way, this black dot is the ARMR VWAP. So what we really look for is gamma and ARMR VWAP or an ARMR PMP location that equals the same. When they're both bunched at one area and we get a break above or below, we know which way to put our trades on. And we can get long right here. We had a real nice trading day all day. Let's swap over real quick to the S&P. Or, you know what, I wanted to show you one other thing. On this day right here, I'm going to do like this. I'm going to show you another gamma level, okay? When we came into the day, the gamma location of 335 was a key location on the NASDAQ. Please notice how the NASDAQ gapped up to that location and could not get above it for the first, what is it, 9:30, 10:30, 11:30, right? For the first 2.5 hours of the day, it could not get above that gamma location, which led to the crazy Ivan because it couldn't break out. Okay? And so what we can do in here when we see this happening is put on index puts, getting ready for the crazy Ivan. So when it implodes, we collect a profit on the puts back down to the next gamma location. So you could use gamma long and short. It's a way to figure out the goalposts on the market. What are you trading between? It's a way to look for, and if you look even right here, you can see this, guys. Let's take this and move it up to this gamma location now. Okay, look at how it took all day to get above this gamma location. Okay? It found resistance over and over again right at that location of 335, which was the location it broke down from on Thursday. When it finally connects and takes it out, it has a nice run to the close. So you know what location to be looking for. And when you break above or below that location, that's where you can put trades on. Let's look at the S&P. See if we can get some information here on the S&P. All right, while we're waiting for that to come up, because sometimes for some ridiculous reason it takes forever, I want to go over with you. These are just the basic thoughts on how to use Gamma information. I really encourage you to take a look at Spot Gamma's website. They have a free trial for 5 days. But don't be discouraged if it seems overwhelming. It's a lot of information to take in. And if you don't have your own strategies and triggers, it's not necessarily going to help you. It's not just a crystal ball telling you the direction of the market. But if you use it correctly and overlay it on a strategy that already works, it'll give you that turbocharged approach. So let's take a look at the S&P real quick. You know, it's the same exact story. We just kind of went over it. I want to share one other chart with you, and then we'll get on to the cannabis couch. Let's take a look at Chewy. Okay, Chewy was a huge trade on our trading desk on Friday. I mean, we had an enormous day on Chewy. So this is the previous day's VWAP, the black line. Now I didn't put in the purple dash for you, but I can. The Gamma information told us that 110 was the key level. Okay, 110 was the key Gamma location for Chewy. Now Chewy is always at the top of our list to day trade anyway. It's one of our favorite investments. We're looking for ways to trade it or hold it and invest in it overnight. So the ARMR day trading way is to look at where the stock is trading the previous day in relation to its VWAP. A gap above VWAP we like, which it did here. A test of prior day's VWAP is step 2. Step 3 is a move above top day VWAP, and that's when we get long the asset. So which names do we want to get long? Well, we want to get long the assets that not only go above top day VWAP. So step 1 is prior day's VWAP, which is right here, this black dotted line, okay? We want to see the asset open the day above yesterday's VWAP. We like to see it at step 1. Step 2, test yesterday's VWAP to prove it's going to hold, which it did right here. Step 3 is to buy the asset if it goes above today's VWAP, which it does at 942. If that also equals the key Gamma level, which in this case it does, Chewy's Gamma level was 110, we hit that idea aggressively, a big position, because that's where the explosive move should occur. And boy, did it occur. Huge run. Those are the day trades we're looking for. And the Gamma information is what really propels our process. Okay, so I encourage you to take a look. One of the beautiful things about Spot Gamma, and I'll just end it with this. If you look at their website, is you can go to their equity hub, and it will pull up any stock you want. So if I put in Chewy, it'll show me the Gamma information. Again, there's a lot of information to take in. But the key Gamma level right up here, and the numbers have changed a bit. They change every day, but 110 was the level we were looking at. Okay? And you could see every day it changes depending on the puts and calls that are bought. So it's very interesting information. Check it out. I think you'll find it interesting. And ARMR Insiders, or anybody who's a subscriber, if you'd like to subscribe, you can subscribe to the ARMR Report right down here, ARMRreport.com. And we're going to have a fireside chat with Brent Kochuba, the guy who founded Spot Gamma, on Thursday at 4:30. Okay? Let's talk about cannabis. This is going to require a quick sip of coffee. Then I'll get to your questions. Okay. Let's look at a couple chart patterns, shall we? No, oh, that's a beautiful chart on Chewy. Holy smokes. How about this favorite of ours, just for the fun of it before I get to cannabis? That's Illumina. I've been talking about Illumina from right here. Okay, we bought Illumina in the ARMR portfolios right there. It's about buying right, guys, when reward's worth the risk. And boy, has reward been worth the risk. And that run up, now this is a really weird run up. I mean, the earnings announcement, the stock was down a couple percent after the announcement in the overnight session, and then it skyrocketed. You know why it skyrocketed? Anybody know why? I don't know why, but I'll tell you something very, very interesting. The gamma location of 450, which is right here. So it closed on the gamma. Prior day's VWAP equaled 450, which equaled the gamma information. We're looking for our own strategies. And then we layer on top of it the turbo juice of gamma, and you get a move that looks like this. The asset went above prior day's VWAP and the gamma location, and the stock skyrocketed. Following ARMR, now we already owned it, so we didn't day trade it, but if you're trying to figure out how would we day trade it, this first bar of the day would say we have to be long the asset. We wouldn't get long on the first bar of the day. We would get long at the close of the second bar of the day at 9:36. We would have gotten long at $482 a share if we didn't already own it before the news came out. And the stock went up 20%. I mean, it just skyrocketed, okay? But it's all about buying right. And what we were looking at way back then is we were buying right down here in the bottom of a huge rectangle. And it's also a question of buying when there's a catalyst. The stock sold off and made this pattern because they announced they were buying Grail, which is the holy grail of medicine and the future of medicine, okay? So we were buying that structure, and it's led to a huge move. I'm going to get to a new idea today. Before I get to your Q&A, I'm going to get to a new idea today that I was just blown away by when I listened to the conference call yesterday. That is right at a key location that we just added to ARMR portfolios on Friday. I'm going to share with you in a minute. Okay, cannabis. Let's talk about cannabis for a minute. Okay, that's a massive blow off top and reversal in MJ, the Canadian stocks. There's MSOS. You can see the difference in that chart pattern. One's had a massive reversal after an insanely ridiculous move, and the other continues to grind higher with one down day. So the first thing I want to share with you about cannabis, the first thing I want to talk about is the real investment opportunity when it comes to what the ARMR report believes is the investment in U.S. cannabis stocks. Over the next 3 to 6 to 12 months to 3 to 5 to 10 years, we believe the real money from an investing standpoint is going to be made in U.S. cannabis companies, not Canadian companies. Now, in the short term, for a couple weeks there, we were happy to play with everybody else, okay? We bought shares of OGI right down here at $1.38. We paid up for it, paid $1.30, $1.77 on the second buy. Okay, we put these positions on, and so we had a huge week, right? And we took these positions off. We were selling some every day on the way up. And then, of course, this huge reversal bar got us out of everything. Okay? SNDL. Huge run. We bought the stock right here, and I told you all about it on the February 8th. I said, here we go. We're stepping up and buying this asset right here. Cup and handle breakout. The thing skyrocketed for 1 to 3 days. We were booking profits all the way up. Look, guys, bulls and bears make money, pigs get slaughtered, okay? So what we try to do when we see a stock that's doubling, going up 50% a day, is we're always selling a little bit into that, and when we have the reversal day, we're gone. Our plan is to take that capital and shift it, take those gains and add to our U.S. cannabis investments. That's my cannabis comment for today. Am I buying those stocks right now? No. You know, here's our favorite names. Okay. There's Cresco, but there's not an entry point there in Cresco, right? So what we need is a structure, a high tight pennant, a cup and handle formation, or a pullback to a moving average like here or here for us to add to this position. We're not adding to it now. Here's Green Thumb, our favorite, one of our favorite investments. Green Thumb hasn't even flinched. That stock looks incredible. I'd like to see a pennant formation, something form that gives us an opportunity. I see Juicy did in a secondary announcement. Maybe the stock will be down a bit. So maybe we add Juicy to the portfolio, right? True Leaf. I mean, these stocks, they didn't have that stratospheric run. They're just in a nice grind upwards. And that's where we want to take our silly money that we just made in Canadian stocks and roll it into increasing our U.S. exposure. And our favorite way to do that really is MSOS, owning shares of that ETF, where we get all of the exposure without the individual stock risk. That's our favorite way to do it. But I might pick and choose some of my favorite names to add around the edges. Okay? Those are my thoughts for today. I know it's been a half an hour, so let's get to your Q&A. I hope you found that helpful. What do you guys have for me? Let's go. Let's chat. Festeroso, Brett. CGC, Kronos are about equal and both are safer pot plays. Is there any hope in AGEN chart? Okay, so let's take a look at charts, right? CGC, so if you want to know what my favorite Canadian names are, it's always been Canopy Growth, right? We were buying long-term options, leaps, right down here. Okay, I'll tell you that I sold those leaps off now. So I made all that money on those leaps, and I'm out of those leaps. But we have a core holding in the stock of Canopy Growth, and we're probably going to build that position up. Right? I love Canopy Growth. I also like Kronos. It's not as good as Canopy Growth from the standpoint of the strength of their business, in my personal opinion. But Canopy Growth and Kronos are attached to Constellation Brands and Altria. So we also own STZ in our portfolio, which had a great week. It went out at the high of the week. Right, and we've owned this cheap. Somewhere in here we own it. Okay? And you have to take a look at Altria. I think we talked about it last week. It's an 8% dividend yield. Trying to break a long-term downtrend, making a cup and handle base. And nobody's giving it credit for its exposure to the cannabis business. But when laws change and they're able to start taking, the $1 billion they invested in Kronos and spreading that Kronos product through their distribution in the U.S., there should be a lot of upside to this stock. And then of course the third stock I like is Village Farms. They have their own distribution. They're doing it their own way. But I think Village Farms is an interesting Canadian play. Those are my three Canadian stocks that I'll own on and off. I don't own them right now, but I will on and off. AGEN. All right, let's take a look. Let's go here. So develops products, technology to treat. I don't know anything about AGEN, so I really can't give you information there. Nothing wrong with the chart pattern, pulling back to a support area after a run up. But can I tell you guys something? Can we just take a minute to chat? Let me look at you. Okay. This market makes me very uncomfortable. So while we had a huge couple weeks, cannabis exploded, we made a lot of money. There are so many issues with the market that make me uncomfortable that if I'm going to keep putting money in the stock market, I want to focus on big cap, liquid names. So when the music stops, and it will stop, guys, we just don't know when, but when it does, I'll be able to find my chair. I hope. I'm going to own big cap names, very liquid names, and I'm going to avoid buying small cap names like GEN, AGEN. You could do whatever you want. I mean, please, you're asking me my opinion of what I would do with my capital, not what you should do with yours. So for my capital, I'm really not focused on small cap names like that. We do not want to be trapped in those names when the music stops. It will be ugly. Please hear me. Please hear me. I've been here before, okay? There'll be just like a trap door that opens and the stocks will be down 20% and there'll be no bids on the way down. That you don't want to be part of that. So watch your position size. Don't be greedy. Book some profits when things move higher. The ARMR Investing Way is to book profits at targets, raising some cash, raising your stop loss, walling off your risk as soon as you can. Put positions on, they skyrocket. You sell some into the strength, you raise your stop and you let it run. Worst case scenario, there's an implosion, you get out on your raised stop and you've booked a small profit and your principal is intact, okay? Please, please be careful in the market that we're in right now. Okay, Tech Monkey, good morning, how are you? Nice to see you. Do you think YOLO, MSO, and MJ are going to be fairly stable if you want to keep these in my portfolio? Long term, just add to them on the dips. Thank you. Those are three great ways to play cannabis. Just have it in the ETFs. You don't have to deal with the hysteria of one or two particular ideas. We are at the beginning of a secular bull market. A group move that I think is going to be one of the greatest investment opportunities in my life. So following that idea of staying with those ETFs and adding on weakness is not a bad idea. I would only suggest this, Deb. Trade around the core. It's not just about building up the position on weakness. It's also about selling some on strength and then buying that and maybe more back on weakness and then selling some into strength. And that gives you the ability to deal with what will be insane volatility. Let me tell you guys right now, don't forget it, okay? When the market goes down, they're going to kill these stocks. I don't care how great the investment opportunity is of my lifetime. All stocks go down at once when it starts to get ugly. The only way for us to deal with that, trade around the core so that you're constantly culling the cream off, booking profits as you go. Okay? Using stop losses, Deb. I'm going to buy weakness, but I also have a line in the sand. If it goes below that, I'm out of all of my cannabis stocks. I don't care how great I think it is. You say you want to be a long-term investor and you want to hold things longer. Okay, well then I'll say this. I'll be out of all of my stocks except for a small piece that's the core that I'm willing to hold long-term, and I don't care what happens to it in the short term. That's very personal. You have to find a position size where you can stomach that volatility. Personally, I can't ever do it. I've only known a few people in my life that have been able to do that successfully as investors. One that sticks up in my mind was a, multi-millionaire who used to run one of the largest corporations in the U.S., who was a client of ours. And I loved him, God rest his soul. He didn't care if the market dropped 50%. Well, you know what? The guy had that kind of money, of course he didn't, right? He was playing with a certain amount of capital. It didn't make a difference to him. It didn't change his lifestyle. So he was able to follow the Warren Buffett way. I mean, if you're a billionaire and your equity portfolio is down, it's not going to stop you from flying your jet. What difference does it make? That doesn't make billionaires brilliant. It just means they have so much money, it doesn't matter if their assets go down. Okay? And so what's brilliant is they see the long-term picture of a particular group and they're able to live through the swings. But you and I, we don't have that kind of cash. I'm not a billionaire. So I have to run my portfolio in a manner where I can protect capital and then capture upside when it's possible. The only other person that comes to mind is the first female general in the U.S. Army. She was a client of mine. I absolutely loved her. She was the greatest. She passed away too. She was just wonderful. And she had nerves of steel. She wasn't a billionaire. She just had nerves of steel, and she could go through anything and come out the other side. You know? So those are the two people that come to mind that are able to do that. If you can do it, great. But the ARMR Investing Way is to protect capital and capture upside when possible. So just because I love cannabis, don't think I won't sell it all if it goes below a certain stop where I say that's enough for me. The market's going down and I'm not holding these positions. Okay? A long-winded answer, Deb. Sorry about that. Maybe this is why I'm a little bit more negative. There's tons of, I'm not negative, but the market looked great. It had a huge Friday. I think it's going up next week. But at some point, this is going to be over. And so I'm trying to figure out what is it that's going to trigger that point. I don't know what it is. But, you know, I have all these things I can tell you about. Margin interest at the highest level ever. Cash balances at the lowest level ever. You know, all this crazy stuff that we know is ridiculous and cannot, you know, will not stand. It will not stand. Eventually it will give way. This aggression will not stand, man. Anybody know that quote? This bothers me here. And I'm wondering today whether or not I need to have a short position on U.S. Treasuries, 20-plus year Treasuries. This is TLT. You know, if this thing breaks down and rates skyrocket, the market's done. And that chart pattern looks awful. Now, I don't know. The reason I don't have a short position on it is I just can't believe that the Fed will let that happen. You know? I think to myself, the Fed's not going to let that happen. So why put a short on there? But maybe that's a great hedge. Maybe I should have puts on TLT that go out 6 months, because at some point treasuries implode and rates go through the roof. Maybe that's what's going to be what happens. We get a non-farm payroll number that blows people away. We have hourly earnings number that goes through the roof. And we get a dislocation in rates. And that'll wreck the market, I would think. Anyway. All right. ID Doc. Back to precious metal miners. I know they've been laggards, but do they deserve a second look? All right. You're going to make me look at it, Mo? I'll look at it with you. The only thing that I really would buy is SILJ. If I can't make money here, this is where all the money should be. Small cap silver stocks, because we think silver is going to get squeezed. That chart doesn't look bad. You know, so I'm tempted to own this ETF. I don't want to pick individual names. You know what I'm saying, Mo? We don't want to pick the one name that doesn't work. If we believe we're going to see a silver spike, what we want to do is own this ETF, SILJ, cover all of our bases. Then if we want to own precious metals, I want to look at Newmont. But that chart is not compelling to me. The relative strength is a 6. Where's the reason? Why should I be buying that? Relative strength of Franco-Nevada is a 3. Pan American is a little bit better. The relative strength is a 41. I mean, you know, this spike here was this ridiculous, you know, Wall Street bet, Reddit, you know, quite frankly, you know, BS that isn't going to happen. Okay, they're not going to. Wall Street bets and Reddit is not going to squeeze silver. Silver, there's been a short squeeze supposed to happen on silver forever, you know, and we caught one last year. But it's incredibly hard to figure out when that's going to happen and when the powers that be will let it happen. It's not easy to squeeze silver. COMEX just jacks up margin requirements. COMEX just says all cash. You know, that's all they have to do is make one change overnight, and it totally wrecks the position. So it's not like squeezing a stock. But I'll give it to you, Mo. If we want to do anything, and I know you're an ARMR Insider, so you might see me add this to the portfolio again, and it'll be SILJ, and we'll see if we can make some money there. Thoughts on QS? Wow, who asked me that question? Mo? I'm gonna have to write that down. We're gonna have to work on that. QS. I'll do some work on that, and we'll talk about it in the day trading room. Not just day trading. We'll talk about it in the morning meeting on Tuesday morning. Okay. That chart pattern looks pretty compelling. Earnings are in 3 days, which shouldn't matter at all because they have no earnings. Look down here. No earnings, no revenue, right? So that's why I usually stay away from those things, but that chart pattern looks compelling, so maybe we'll take a look. Okay? All right. Oops. All right, any thoughts on ABML? All right, let's take a look. ABML. Whoops. ABML. I don't get that. It doesn't pull up on the chart at all. So, EV battery recycling in Nevada. I don't know. Unity. How about you? Unity software. Mark, I'll tell you, that chart pattern looks god awful to me, and so I like to buy weakness in the midst of strength. I don't like to buy weakness. So I promised you guys I would tell you a stock that's setting up in an unbelievable way that we added to portfolios yesterday. So here it is. Drum roll, please. Is somebody drum rolling? I don't hear it. Here we go. Okay? That's the type of a setup I'm looking for in Peloton. Weakness, massive strength, weakness for the last month. Now, why was there weakness? Here's one reason, and this is the reason I love. They announced an offering that was dilutive, and they priced it Thursday night. Now, here's what amazes me about this. It was a convertible debt deal, which to equity players is just like doing a secondary offering of equity because the debt converts to equity. So the street treats it just like a regular secondary, and the stock goes down based on dilution. What that means is if it's a 5-year convert, there'll be a certain price that if it trades above that price in 5 years, they can convert to equity. Okay? And it usually carries a coupon, an interest rate. This is what's amazing about the Peloton deal. The conversion price, usually the conversion price is 25, 30% above where the stock is trading. This was 65%. Stock's got to go up 65% to convert it to equity. And check this out. The interest rate was 0. So the debt players are actually giving us equity guys free cash of $1 billion for Peloton to build their business. And the debt guys don't get paid on it. 0 interest rate. And they don't get equity unless the stock goes up 65%. That's an unreal deal. That's an unbelievable gift for Peloton. Now, if you were on the earnings announcement last week, I've covered a lot of earnings announcements over the years. Okay? I think I could say with a fair amount of certainty, I've never heard a company talk about how business is so explosive they cannot keep up with the manufacturing. So they're cutting their marketing costs dramatically because they don't need any more business. Their backlog is ridiculous. It's growing like a weed, and they don't need to market. It's like grassroots marketing. And they're taking that and more capital to invest in their manufacturing so that they can fill the backlog, and their shipping so they can get it to people faster. So those costs are going up while marketing is going down. So there's execution risk here for the next 3 to 4 months. They have to take all this money, $1 billion. They have to fix their manufacturing. They've already done that in the last 3 months. They've gotten their own manufacturing facilities up and running. They're paying shippers to get product to customers faster. Why do they do that? They don't care necessarily about the margins on the product they sell, the bicycle or the treadmill or whatever. Peloton, in case you don't know, is the Netflix of workout videos. Beyonce is making a workout video for them. I mean, they are literally they've captured a market with high barrier to entry. Their revenues and earnings are triple-digit growth, and they can't keep up with it. It was an unreal earnings announcement. They raised $1 billion of cash at 0 interest rates. That doesn't convert unless the stock goes up 65%. So now it takes me to the ARMR Investing Way of risk, reward, entry points. My stop is clearly the low of the day of the debt deal pricing. And I love stops like this, okay? It happens to also be the 50-day moving average. So this is a simple trade to me. I put the trade on, we put it on at the end of the day. I might add to it, in the morning. If there's weakness in the morning on Tuesday, which I hope there is, I'd like to add to my position, okay? And the low of Friday is the stop. So the risk is very well determined, but I think the reward could be significant if this market keeps charging on. So there's an idea for everybody who's stayed an hour into this video. Thanks for staying for an hour into this live stream. We're almost done. And there's your gift for being such a loyal fan and such a loyal viewer. I love what you guys bring to the table for me. I hope it helps you guys, but it really helps me. You bring in some really interesting ideas for me to focus on. And there's a gift for you. All right. Faded Trader. Hey, Brett, thoughts on MJO? Ooh, micro-set cannabis. North American Cannabis Index. Huh. I don't have any thoughts there other than this. Notice up here it says the average trading volume is 5,300 shares. I can't do that. Look down here. Look at the average volume on a given day. That's just too small for the money I'm running. So I can't mess with that. It's 2x leverage. I don't need 2x leverage in these names. So I'll leave that up to you, brother. Okay? Bulls and bears make money. Pigs get slaughtered. I don't need 2x for cannabis. I just need cannabis. All right. A lot of attention being paid to buying of the VIX for expiration this coming week. Thoughts? I don't really understand that attention that's being paid. And I have to go read that article. I think it was JP Morgan that wrote about it. I'm watching VIX break down to new lows. Who's buying all the VIX? I don't get it. So I have to read that story, and maybe I can comment. I'll comment in the 8:30 meeting on Tuesday morning for ARMR Insiders about that very issue on VIX. But I don't. VIX just broke down. I mean, it looks like VIX is going down to pre-pandemic lows. Okay, which I think is going to be the impetus for the market to break out and have its final run. So this is VXX. We just broke below 16. I think it's coming down in here to the 13 area. I think that VIX itself is coming down to the 10 area. Okay? I don't see a lot of people buying VIX. I don't get that story. I have to go read it. Okay? Thoughts on NNDM? I'm going to share with you something. Okay. I think you're going to find that NNDM is going to raise even more money. I've already shared some information with ARMR Insiders. I think you're going to find in the very near future that Nano Dimensions is raising more money, maybe $250 million more which put like $1,250,000 on their balance sheet. Now I'm going to say this, and I hope that you all understand what this is a guess on my part. Can I talk to you guys for a minute? Can I share this information with you without you misunderstanding me? I'm going to make a rank speculation now. I have no information that would tell me this. This is just a total guess from cobbling together a bunch of pieces of information that I've heard, and here's my guess. Nano Dimensions is raising an obscene amount of money with the help of Catherine Wood of the ARK funds, who keeps buying a whole bunch of every one of these deals. The CEO, whom I had the pleasure of chatting with one-on-one, he's a wonderful guy, told me flat out, very honestly, they don't have a production product for the next couple of years. Their product goes into research centers, people use it to help research, blah, blah, blah. But when Nano Dimensions really hits its stride a couple of years from now, they're going to have a product that is a production line product. Now, with $1 billion of cash, maybe $1,250,000, they are going to be able to do one of two things: speed up the time with which they can get to market. So when I spoke to him when the stock was trading at 6 and 7, he expressed that they're not going to get to market for a couple of years with a production line product. Well, maybe all that cash will help them get to the market quicker. That's why the stock's up. But he's also expressed to me and publicly through a letter to all shareholders his intent to make acquisitions to turn this company into a major powerhouse of 3D printing. Here's my thought. I'm just throwing my hat in the ring. You heard it here first, but it's rank speculation. Are we all clear on this before I tell you? Okay, here we go. X1 is another stock that's inside of the ARK funds. It's another 3D company. It has a market cap of $1 billion. Okay? It's got revenue that's ramping. NNDM. No revenue. Nothing ramping. But their market cap is $2.7 billion, and they've got $1.25 billion in cash. I submit to you that NNDM is going to try to take over X1. Rank speculation, guys. I have no idea if that's true. I have no idea if that's true. But it seems to me that it would be totally feasible that Catherine Wood is helping NNDM raise massive amounts of cash to go acquire another company inside of Catherine Wood's funds, which is X1, making a powerhouse in 3D printing. Total guess on my part. Total guess. I don't own either of those stocks right now. But they're on my radar. Okay? So be prepared for more capital raises and eventually, I think, a deal. Now you could say, well, what about these other stocks? DDD. Okay, but look at the market cap of DDD, right? It's a $6 billion market cap. How about SSYS? Right? It's a $2.7 billion market cap. He's not going to buy those companies, but what about X1? He can pick up a new company, revenue building, with only $1 billion in market cap. And it's part of Catherine Wood's funds. Wouldn't that be interesting? I don't know where I would buy this stock. I can't pay up for this thing here. I'll day trade it. But that's something for you all to think about. Okay, any thoughts on Lockheed Martin? Let's take a look. LTM. What time do we have here? Geez, we're going way over. I'm going to have to split here. LMT. Let me just try to rip through a couple Well, Lockheed Martin, it says it all right there. 2 relative strength in a stock market, the stock chart pattern that doesn't interest me at all. Just ripping through here. I don't have any information on these things. Huntington. That looks better. 7 relative strength. Don't love these stocks. These aren't my favorite names. Here's my favorite name in the defense space. We've owned this on or off. We don't own it right now, but Kratos Defense is our favorite name. 84 relative strength, and it's something I think Lockheed Martin might take over for all I know. So I'd rather own this name. And right now I don't own it, regrettably. I sold it right here in the 30 area, or 29 and change. So, all right, next question. Do you think Curaleaf is a worthy investment? I love Curaleaf. I'm not buying it right here, but I think it's great. Brett, before fun times. How do I control the urge to want to get back in because I want more? I made money with OGI. I did buy some Eras stocks. It's the urge to want more. Brian B. How do you control the urge? You just try to follow the investing process. Don't look at your P&L. And the minute you realize it's an urge based on greed, you do not do it. You just walk away from your screen, Brian. It's the hardest thing in the world to do. But the ARMR Investing Way is a process that over time, we're caught in a microcosm right now of an insane market. If we don't follow the process correctly and we get drawn to the rocks by the sirens, if you will, right? The ship's going to crash. So we capture when we can capture, when the entry point's right. Hey man, I'll be back at these names if they set up again, and we'll have another big run. But right now they had a massive blow off top reversal. I'm done. We have our core position in the ETFs of cannabis, but I'm not chasing these names. Patience, man. We'll find other ideas, other setups. Oh, good for you. Perk and Elmer, all right. Peloton and X1, rotator, wonderful. All right, hi Brett. Very helpful. Thanks so much. Protecting capital. Fintech company, PaySafe. All right, I'll take a look at it, Kevin. Thanks for that thought. Okay, am I a buyer of Disney? We do own Disney. We owned it in front of the earnings announcement. We still own it after the earnings announcement. I think Disney's going higher. I thought that was a good announcement. So at these levels, I'm not buying it. We bought Disney here. Okay? As an ARMR insider, it's about buying right. Buying close to the moving average, buying close to your stop, never reaching. So I'm not buying Disney up here, right? You make your money when you buy stocks, ladies and gentlemen, not when you sell them. You have to buy them right, and you have to not reach, particularly in a market like this. Juicy and Kern. Well, Juicy just did a secondary, and I like Juicy a lot. Okay, so JUSHF, is that what it is? No, I can't remember what it is, but JUSHF, I thought. Oh well. But anyway, I think Juicy is a great idea. But I showed you here on this chart. Let's look at this chart. Juicy. Whoops. You're looking at me. Hey, guys. Juicy. So it is JUSHF. Okay. So I need a consolidation. If it makes a pattern in here, it's going to do a secondary and price. Maybe it's going to price down here. You know, if we get a nice entry point, I'll be happy to add Juicy to the portfolio. That's for sure. What's the other name? Kern. Oops. I'm still doing research on Kern. Truth be told, we added some Kern right down here on this day right here, okay? And it broke out. Now it's come back in. I'd like to be buying some more Kern. I think there's potential in Kern, but it's very, very early. So it's going to require patience. Any thoughts on your stops on Fastly? So stops haven't triggered on Fastly yet, but you know, that's my particular stop. My stop is going to be the 50-day moving average right in here. Okay. Here's what happened in my opinion. This is what happened last week in Fastly. The stock came down because its two major competitors announced earnings and the stocks imploded. Akamai's earnings were announced, stock imploded. Okay, and then this is not a competitor, but a lot of people tried to pretend this is a competitor. It's not a competitor. This is a terrible company, and the stock gapped down with a terrible quarter. All right, and anybody following me on this channel is aware that I've been saying from the get-go that Limelight Networks is not a Fastly. Okay, they're trying to pretend they are, but they're not. And the management team's not somebody I want to be in bed with. So I said that, you know, up here, and all the stock has done is gone down since I've said that. So hopefully that helped you avoid that disaster. I think it's possible that Fastly's eating everybody else's lunch. They're going to announce earnings in 4 days. I could be wrong and the thing could implode. I don't have any inside information. I never do. All I could do is make an educated guess. If it stays above the 50-day, I stay with the stock. If it breaks below it, I'm out. And I might have to adjust position sizes going into the earnings number. I don't know. We'll see. But I'll tell you something else. I like stocks that go down in front of their number. Very often, stocks that run up into the number go down on the news. Even great news, because they sell on the news. Fastly is going down in front of the number. If they actually post a better than expected number, the stock will skyrocket. So, look, if it closes below the 50, I'm out. If it stays above the 50, I'm going to hold it into earnings, and I'll adjust my position size so that it doesn't kill me if I'm wrong, but I'll be there with a piece if I'm right, and I can build that position into something more meaningful. There's my thoughts on Fastly. CCIV. Guys, I got to get out of here. I'm sure you do too. Blank check company. I don't have any information for you there. It looks good though. Running away. HASI. I keep missing the stock all the way up. It's been an unbelievable REIT. You know, I should have owned it down here at 30 to 70. It's a sustainable infrastructure REIT. It's really right in the sweet spot of Democrats. It's perfect. And maybe we'll get a shot at it on sell-offs. So that's a quality name. Okay. Oh, there's the drum roll. I just saw the drum roll, Michael. Thank you. I love it. I love it. ZOM. Whoops. Can't help you on that. Small peanut stock. No interest in chatting about that. ZM, Sean's one of my favorite positions. Perfect entry point, right? Look at that entry point on ZM. We bought it right here, tight to the base. They did their secondary offering right in here. Okay, stock never went below the secondary. Now it popped above the moving averages. I think the stock goes a lot higher. All right, guys, I guess we're done for the day. Thanks so much for I wanted to thank you all for being here and joining me. Consider becoming an ARMR Insider if you'd like to be part of that fireside chat one-on-one with Brent from Spot Gamma, so we can ask him all the questions and get our answers on how to maximize that information and make money. I'll see all ARMR Insiders Tuesday morning, 8:30 for our morning call. Otherwise, have a great weekend and a happy Valentine's Day. I love you all. Take care.